But we'll start with the markets. All three indices in rally mode. The Dow, the NASDAQ, the S&P up more than 1%. Joining us this morning, Brian Belsky, the Chief Investment Strategist at BMO Capital Markets. Michael Feroli is the Chief U.S. Economist at J.P. Morgan Bank. Guys, good Monday morning to you.
Morning.
Brian, what is today about? Is this about some of the good vibes we got on Friday? Is this about the EU and the IMF coming to terms on Greece? Is it about what Bernanke may or may not say in New York tomorrow, or a combination of all these things?
Carl, it sure looks to us like it's a combination of all those things, plus calmer heads have clearly prevailed. We're in one of these situations with investors where you fire, ready, aim. We're reactive to any kind of negative news that comes out, and I think people jump to conclusions with respect to the fiscal cliff situation. The bottom line on the fiscal cliff is nobody really knows exactly what's going to happen, but what we do know is that something is going to happen before the end of the year, and I think that what we've seen the last couple of weeks in terms of an overreaction from investors has created another buying opportunity. We're still very bullish near term and longer term with respect to U.S. equities.
When you say something is going to happen, what do you mean by that?
Well, you think about the three legs of the stool of the U.S. Economy. You've got corporate America, consumer America, and the government. Two out of the three have done the right things the last 10 years, meaning cut costs, building new revenues, rebuilding their balance sheets. Now it's the job of the government to do that, and we think it's going to happen. Why? Because it has to happen, because fiscal cliff happens on a near-term basis. We go over the cliff, it runs into a recession. Everybody knows what's happening, so we think now's the time for everybody to get together and play nice in the sandbox and a bipartisan effort to get things done finally.
Well, you obviously have confidence in Congress. That's a good thing to hear, Brian. Not everybody shares the sentiment, of course. Michael, meantime, we're coming off of a week in which Philly Fed was disappointing, industrial production claims very noisy. Is it being offset completely by what housing said today?
Well, I think you're right that the data is going to remain noisy for a few weeks still. I think seeing through the sandy noise is going to be really difficult. I think what you're referring to on the fiscal cliff, we have been viewing a deal as the most likely outcome. I think what we heard last week from the leaders coming out of that meeting is that a deal remains on track. So there's still, though, a lot of details that are unknown. As Brian said, no one really knows what's going to happen. We will get some deal. There are deals you could get that have a lot of fiscal drag still. Some deals that don't have quite as much fiscal drag. So we feel like we're moving on the right path toward getting a deal. We just don't know exactly what that's going to look like quite yet.
Yeah. And meantime, we mentioned this Bernanke speech tomorrow, 12:15 p.m. in New York, guys, at the Economic Club. After the minutes that we got last time, Michael, do you expect him to lay a platform for some additional accommodation, given that so much of the committee seemed to be in favor of doing more if employment does not improve?
I think he'll certainly leave the door open to that. However, throughout his tenure, Bernanke has not been one to really front-run the committee, certainly not 2 weeks ahead of the next FOMC, 2 or 3 weeks ahead of the next FOMC meeting. So we would expect, the door to be left open. He may talk a little bit more about some of these changes in strategy toward talking about numerical thresholds and so forth. But I'm not sure he's going to give us on a silver platter that QE is coming up in December for sure.
Yeah. Finally, Brian, in terms of sector exposure, if one follows your view that Congress is staffed with rational actors and that we are going to get some sort of framework agreement by year end, what do you buy first? What's at the top of the list?
Well, let me just tell you, Carl, that our basis is really common sense, and sometimes common sense doesn't apply to politicians, let's be honest with that. But when you look at analysis and where the economy is and where the business cycle is, we clearly believe that technology, industrials, and energy stocks in particular, the next 3 to 5 years, will lay the foundation for the next great bull market as we transition finally out of bonds and into stocks. We think those three areas in particular in the U.S. economy will benefit.
All right. Well, we do have the 10-year back above 1.6, so that's baby steps, right? Guys, thanks a lot. We'll talk to you later.